sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following segment is brought to you by Wilsey Asset Management. Joining me again this morning is Brent Wilsey, of course, the president of Wilsey Asset Management. So when you're choosing an investment firm, there are a few key considerations you need to take into account. And Brent is here today to review what should be on your checklist. Questions that maybe most people never ask, but probably should.
Yeah, and Roy, before the segment, you said, do people ask these questions? And no, because they don't know what to ask. And as we're getting closer to the end of the year here, people may be thinking, gee, should I get a new financial advisor? Yeah. They look at the performance. Gee, I'm only up 2% year to date. I think I should be doing a bit better, so they should be looking around. Maybe it's poor customer service. Maybe not get customer service. Maybe they call their broker, call their advisor, and don't hear back after a few days, sometimes not at all. Then maybe you want to start looking around for a new financial advisor.
Okay, so let's run down these questions then. Sure. One, is the company and the advisor a full fiduciary? Explain what that is and why it's important.
Sure, very important. And let me explain fiduciary. Fiduciary is where, as an advisor, you have to do what's best for the client, not what's best for yourself. And why somebody would go to a non-fiduciary, I don't understand it, but you should always ask if they're a fiduciary. Compared to a broker does have a lower standard. And again, fiduciary is registered with the SEC. But a broker, they have a lower standard called suitability. Now what that means, they could sell you any mutual fund, could be the worst performing mutual fund, but it's suitable. Hey, that's okay, it's a lower standard. So you don't want to go to a broker. And the other thing you want to be careful of as well is there's now hybrid brokers. And that's where somebody says, yes, I'm a fiduciary, but they're also a broker as well. So you never know what capacity they're operating in. And if they're operating on the broker side, it's because they want to get those big commissions on top of the fees. So you should never go to a hybrid broker. You should only go to a fiduciary because they do have your best interest at heart.
So it may be their agenda, not necessarily what's in your best interest.
Yes.
And that gets into whether they're able to sell specific products and what it is that they might want to promote. Right?
And you'll see they're trying to sell products. And the big one right now is alternative investments. And this reminds me back, older people remember the limited partnerships back in the 80s. This is really what this is, where they get bigger fees, they get bigger commissions, and this is like private equity, private loans. Also, you can sell mutual funds. A big abuse is the sale of annuities. I mean, annuities, people don't realize this. They get paid a 7% commission, and your money's locked away many times for 5, 6, 7 years because that broker got this big commission. So you want to ask that broker, that advisor, how much are you getting paid? And I know it's an uncomfortable thing, but they're there to give you financial advice. You need to understand if they have a bias towards selling you this product where you get 7% commission, or this over here, managed money, gee, I only get 1%. You want to make sure there's no bias.
I'm starting to detect a recurring theme here. The other thing you want to know is what is their investment strategy and how it is that it aligns with yours.
Yeah, because there's growth investing, there's value investing, and growth investing is much riskier than value investing. There's asset allocation, so you want to understand what is their philosophy so you know going into it, because investing is not all a smooth ride up. You're going to have your peaks and valleys, so you want to understand what type of ride am I in for here.
This is one thing that I know that you do, which is great. You want to know how the advisor manages their own personal investments, and you're invested in what your clients are invested in.
Exactly. It made perfect sense to me. I started doing this business like 30 years ago, and it's like, well, gee, if it's good for me, it's good for my clients. I've seen brokers, or I've talked to them, like, well, I'm more conservative, but they put their clients into other investments that are aggressive. Like, well, why are you not doing the same thing for your clients as yourself? Because you're concerned, and it just doesn't make sense to me, or vice versa the other way, to where they're very aggressive and their clients have put them in annuities, you know. So they ask that broker that question, where are you investing all your money? And don't be afraid to ask that question. I know it's uncomfortable, but again, keep in mind, this person's here dealing with your life savings many times. You need to know, what is their biases? What are they doing? What do they think is really right? Because right for them, gee, should be right for you as well.
Okay, many things to watch out for. We haven't got into some of these mutual funds, ETFs. I know those are a concern for you too. We'll have to come back and talk more about this.
Yes.
We've started that checklist. This is what we need to be aware of. Thanks, Brent. Appreciate it. More information online at smartinvesting2000.com. We'll be right back.